Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, April 16th, 2013. Well, a continuation of the trend to the downside today. Previous day's candle we had a very strongly negative candle that made a lower high and a lower low. The sellers closed with control in that candle. For today's trading, we've seen the sellers unable to breach the low of the previous candle. We have, in bar chart terms, an inside day candle or a bar that's made a higher low but a lower high. So technically the configuration of the downtrend with a lower high and a lower low hasn't continued, but we don't have the opposite configuration, so technically the downtrend continues. Now, in bar chart terms, this is a potential short-term reversal pattern, and it's a hook reversal, and that's where we have an inside day and a day that opens at the low and closes at the high. So we've pretty much fulfilled those requirements with this candle, and that has set the market up for the change of trend. And what we're looking for now is a confirmation of that, with the market making a higher high and a higher low, and that change of trend. In terms of the candlesticks as well, it's a potential reversal pattern on two fronts. A tweezer's bottom pattern, and that's where we have the two lows here pretty much at the same level, and sets this market up for a change of trend. Confirmation required with that. And also a potential harami pattern, and that's where we have the body of the current candle within the body of the previous candle, a white body today, a black body for the previous day's trading, and a very strong suggestion based on that for a change of trend. But all of these potential reversal patterns do require a change of trend and confirmation of a change of trend, and that would be a candle or a bar with a higher high and a higher low. Now, in terms of the short-term dynamics of this current candle, a bullish candle and quite a change from the previous day's trading. And yesterday I suggested that there was a possibility that the market did too much all at once with this very large black body candle, and the sellers taking very strong control and being strongly committed, and they needed a rest, and we were a good chance of seeing some profit taking here and some buying coming in, and that's exactly what we've seen today. We've seen the buyers close with strong control at the finish of trading today, and they've shown very strong commitment. The sellers didn't have any strength throughout the trading day, really. The buyers have been able to open the market up at the low and trade the market all the way up pretty much to close at the high for today's trading. A very small hint of a loss of commitment, but interestingly, that small amount of loss of commitment has occurred at the 1576 level of resistance, and that will be an important level if this market is going to change the trend back to the upside. We will be looking for a potential higher high and higher low here, but this strong barrier 1576 is crucial. So there is a potential that the market may not change trend because of that resistance. But if we do see strong bullish activity up above that level early in tomorrow's trading, a good suggestion that there is a possibility of the market to trade up, back up towards the highs of the previous few days, up around the 1600 round number level of resistance. Now, in terms of the Fibonacci extension, and remembering we haven't had a change of trend yet, there still is a possibility of this trend continuing down, so we do need to watch the low of the current candle for a potential continuation with a series of lower highs and lower lows. And we have a target down at the 161.8% at 1542, so if the market does test down below where we're trading at the moment, that is the level we should be watching. But certainly, looking at the short-term dynamics, they aren't favouring the continuation of the trend at the moment. The sellers have lost control, they've lost commitment to taking this market lower, and the buyers have taken that back and have gained some good solid upside momentum in a good answer to the previous day's trading. In terms of the Fibonacci retracement, it seems that the 78.6% level has held here for the previous day's trading, and the market traded to that level, traded through the important 38.2, 50 and 61.8% level. 78.6 isn't as strong a level as those previous, but still not inconsequential. We should really watch the market and how it reacts to that level. With the buyers coming in around that level, it does suggest that there is a good possibility of a change of trend, and we are looking for a higher high and a higher low. Now, in terms of Ichimoku, a bullish market in the long-term time frame by trading up above the cloud, and the market now was bullish once again in the medium and fast-term time frames by trading up above the Kijun-sen and the Tenkan-sen. This cross up above the Kijun-sen is a buy signal in Ichimoku charts, and it is a strong signal because it's occurred above the cloud, so it suggests that there is a good possibility of this market trading higher. Obviously, the 1576 level will be a solid barrier to the market trading higher and should be watched very closely. The Chikou span, the orange line here, is above the corresponding price action, so it's confirming the bullishness that we're seeing in this market, and it does seem as though this market is set up for a potential change of trend with a higher high and a higher low. Already mentioned strong barriers to this market trading lower, the 1555 level here, the low of the current candle does need to be watched, and then down around this level at these swing lows in the recent past, roughly about 1539, 1540, should provide very, very solid support if this market does continue the trend to the downside. But just looking at this current candle as it's developed, it's a very good answer to the bearishness of the previous day's trading. We do have multiple reasons based on those short-term reversal patterns that have been set up. We do have very good reasons for a potential change of trend back up to the upside, and a good likelihood of the market testing back up towards the 1600 round number level of resistance.